Okay. Okay, so this example that we're going to go through is hopefully going to give you some framework to do that comprehensive problem for this week 2 assignment. This scenario is we are operating an accounting service business, and so what that problem is going to ask you to do is, at the end of the day, prepare financial statements. And like if you go, the only way to prepare the financial statements is obviously go through the accounting cycle. So you'll have to go through the process of recording journal entries, and then also recording adjusting journal entries, and then preparing adjusted trial balance that you use those balances and then prepare the income statement and balance sheet, and I think maybe statement of retained earnings. So what we're going to do, so the first step is always figure out the debits and credits for all these journal entries. So we'll go through some of these examples here, and then I'll pull up another spreadsheet to show you kind of what to do once you have these journal entries prepared. So December 1st here, issued 10,000 stock to Austin and 10,000 stock to Justine at a share price of $50 paid in cash. So the journal entry for that, anyone?
Cash.
So we know cash is involved, and then
Owner's equity.
yes.
Austin, owner's equity.
Yeah, and then just keep things simple for now. We'll just call it stockholder equity. And then so it's 20,000 of stock times 50. Let me double check this solution real quick to see if I have the same numbers. Yeah, okay, good. So then the credit would be stockholder equity. 4 million. Questions? Stop me if you're not understanding why we did the journal entry. Okay, purchased a new office building for $500,000, paid $250,000 cash, and borrowed $250,000 from the bank. So, building, which is what type of account? Asset. Yeah. We have cash, and then payable. Yeah. $250. Okay. Next, paid $5,000 cash as 3 months advance lease on a copy machine.
Prepaid lease. Cash.
Yep. Prepaid lease is what type of account?
Asset.
Asset, correct. Purchased office supplies that will last for several months on account with Office Depot for $1,000.
Office office supplies and accounts payable.
Uh-huh. Now, supplies like, is that in this example, is it asset or an expense?
It's an asset.
Yeah, I think that's how, I had this template.
And then you're gonna probably office supplies expense or
Yeah, office supply, what did you see? Yeah, yeah. Now there could, yeah, like there could be some nuances in the real world, like where some people just expense the supplies instead of doing it. But I think I put this in the template because I think the textbook has uh, has it going to an asset account for supplies and having you do an adjusting journal entry to true it up at the end of the month.
supplies.
Yeah, yeah. Which in the real world, especially for small businesses, you're not necessarily doing that. Sometimes you're just coding it straight to office supplies expense. This is just trying to get you to understand the theory behind like accrual based accounting and like you haven't used those supplies, all you expense them as you're using the supplies. That's the whole reason why it has that in there. Oh yeah. Accounts payable. Receive 10,000 cash upfront from client for accounting services to be performed at a later time.
Cash and income.
Uh-huh. Unearned. Unearned income or unearned revenue is what type of account? Liability account, correct. Because in this case, the accounting firm has the obligation to perform those services they haven't performed that service yet, but they got paid up front. So it's a liability because they have the obligation to perform that service to the client. Paid salaries for staff for first 2 weeks of December for $5,000.
Salaries paid
Salary
or expense.
expense. So first 2 weeks of December. So it says they paid. So it's cash. $5,000. During the first 15 days, perform $20,000 worth of accounting services, and 15,000 has been received in cash.
Cash, accounts payable, receivable,
Receivable.
income from service.
Yeah. I might need to clarify. I perhaps might need to clarify this particular example because I'm not sure if unearned. I don't think I meant. I don't think I meant for us to think about the unearned revenue because I think I probably have here in these adjusting tabs. Yeah, for this particular example, we're not thinking about the unearned revenue. This is just for that was kind of tricky, but you'll get more information about the unearned revenue on this adjusting entry data tab. So for this particular transaction, unearned revenue is not supposed to be hit. It's revenue. So I can't remember what I'm using. I'm using service income as the description for revenue. Service income. So in this case, 15,000 received, 50 or 5 going to accounts receivable, and then 20,000 hitting service income.
But since you're not on the cash, you're on the accrual method, then you have to realize the O20 for income.
Yeah, because it said that you performed 20. You actually, the key word was performed. That's why. Okay. Any other questions? Computer and servers went down. Called the IT guy to fix. He billed $1,000 for his service and waiting to pay. Looks like I labeled it in the maintenance expense. That's what I put on the solution to this. So obviously you can create a category. I think in the textbook it might have the categories to pick from. But this could sometimes in the real world they might use technology expense, maintenance, computer expense. In this one, I used maintenance expense. It's computer expense probably better description, but for the solution, I put maintenance expense. The main thing is you're debiting an expense account. That's the main thing, and the categories sometimes can have some variation on what you decide to describe that particular expense account. But since it went on, since we're waiting to pay, what would the credit go to? Accounts payable. 1,000. Okay. Collected 2,000 of accounts receivable. So cash and then accounts receivable. Paid salaries for staff for first 2 weeks of December for $5,000. Yeah, typo. What was that other one? Paid salaries. Yeah, that's a typo. Last 2 weeks. I'm pretty sure. Let me just make sure I'm salary. Looks like there might be. Okay, yeah. So hey, so notice the date on this. See how it's 12/26/2017. It will all go to salary expense, but you'll notice that once we get to the adjusting journal entry tab, we're doing an accrual to like put on the books the salary expense for the remaining 4 days of December. Okay. 12/27 paid the accounts payable to the IT guy for $1,000. So you'll debit accounts payable and credit cash. 1228, declared dividend of 10 cents per share payable the next year, January 15th. So dividend,
Shareholder dividend.
yeah. And that what type of account is that? Dividend is what type of
Shareholder
equity? Correct, not an expense. Doesn't affect your income tax calculation. So since it's payable January 15th next year, yeah, and typically I think you have a separate payable account called dividend payable. I'm pretty sure I'll probably set it up that way. Yeah, dividend payable. So that equals, there's 20,000 shares total that have been issued to two different, and then it's 10 cents, so that's 2,000.
So this one I didn't understand. Like I looked at this earlier.
Huh.
Because you have a prepaid insurance account there, but you don't have it on the adjusting entries on the next page.
Well, probably needed to then, huh? I probably need to have adjusting entry on the for the insurance. If I had that, I wonder if I have that in the actual solution, because I have two separate files, one that doesn't have the answer. We can double check that. Insurance expense. Oh, okay, hold up. Let's read the dates also. What was your question? Are you wondering why you didn't expense the insurance as an adjusting entry?
Yeah. So it's
Yeah, I think
prepaid.
it's actually the timing of when it was paid. You notice that the policy doesn't even go into effect until January 1st, and so they.
But shouldn't you credit or debit prepaid insurance? And
Yep.
then credit cash.
Yeah.
Okay.
Yeah, that's the entry here for sure. But the reason why it's not on the adjusting tab is because of the timing of when you bought it. You bought it December 29th. It doesn't go effective till the next year. So the first time you would do the insurance expense would be when you're closing January 28th, like January.
Would you put a reversing entry in then for it?
In January,
Oh.
you would, but for December 29th, the only thing you're doing is just putting the prepaid insurance on the books,
Okay.
and then cash. That one was confusing because of the timing of when you bought the insurance at the end of the year, and then when the policy went into effect. So that's why you don't see the adjusting entry to expense insurance.
So since it's prepaid insurance and it's an asset, it won't go against expenses, right?
Exactly. So in this 2017 books, nothing's hitting the income statement. But you're seeing it go on the balance sheet. You're seeing the prepaid asset go on the balance sheet. Yeah. Does that clear up that?
Yeah, but like that's kind of a tricky one because it could affect, if you don't classify it right, it'll affect your
Exactly.
income tax that you calculate.
Right. Yeah. Because if you ended up expensing the insurance, that would actually you would be paying, you misrepresenting your profit, would thereby paying less tax on it by error. Yeah. Okay. Received bill from Twin Cities Utility for $550. payable in 30 days. So utilities, which is an expense, and then accounts payable. Accounting services performed for second half of December amounted to 30,000, of which 20,000 received in cash. Yeah, once again, like for the purpose of this example, don't read too much into that, like the unearned revenue. The whole unearned revenue data would be on the adjusting journal entry data tab. So this is so we know cash is involved, accounts receivable, and service. What do we call that? Service income. So we know we received 20,000 cash. 10,000 of the 30,000 revenue went to accounts receivable, and then 30,000 went to service income, which is a revenue. Okay, so then let's stop here and then go to the solution file. I'm gonna post this solution as like a template, and you could. I know a lot of students in the past have just used this template to then prepare the comprehensive problem. So the next step on the tab that you're populating is this 10-column worksheet. So what we just got done doing with those journal entries is we're then going to be populating this trial balance, these two columns, and column B and C, the trial balance. But obviously, as you know, we hit cash multiple times. We hit, other accounts we've either debit or credited, multiple times. So what I did here is I just performed a pivot table. How many of you have ever? Is pivot table a new thing in Excel for you guys, or any experience with pivot tables? I'm recording this too, so hopefully if you can go back and look. To do a pivot table, you're going to actually go to the tab where you did the journal entries. And you're going to highlight all the data like this. After you have it highlighted, go to Insert, and then this pivot table button. So since you've already highlighted the data you wanted, that automatically, you don't have to change this select table range. You just push OK. It's going to create a new worksheet, a new tab within this, a new worksheet within this file. Push OK. And then you're going to click these three fields, and depending on your computer you're working on, and kind of sometimes like Excel is a little finicky. Sometimes it might not automatically sum up all of these, so you might have to come uh, and change. It might do a count. It might just count instead of sum. So if you have to troubleshoot that, you can just left click on the field where it says value. So yeah, if that box goes away, you just click on this pivot table that just populated. You see, click there, and then you come over here. See this value? See how it says sum? So it's saying that you're wanting to sum up all the values that are in the credit column for like accounts payable. If you left click on that sum of debit, click the value field setting. See how it has the type of calculation right here? Sometimes it goes to count instead of sum. So if you had to go change it from count to sum, that's how you go do that. So what I like to do is I like to just make sure I got all my data. So you see how the debits and credits equal each other? That's one way you know you got the data. But then also if you want to sum up everything on that tab, see how it says the sum 1,158,3,750? See how that ties out to your sum right here? That's how you know you got all your data. You might not, I mean, if you didn't even want to do that pivot table, you could just go through the whole drill of just doing it manually, you know. But that, I don't know, I figured that saves some time of adding all that stuff up. Then once you got that pivot table, you're then, right now, once again, we're only populating this trial balance. We hadn't done any adjusting journal entries yet. I guess theoretically you could, I guess, do the adjusting journal entries and just do one, but this is like what we've done in the past. So you're taking the cash. So the cash is you're pulling it from that pivot table you just made. Okay, so you click equal and go back to this pivot table and find the cash. You're taking the sum of the debits, and then you're going to subtract out the sum of the credits. And then that equals the 779,800. So that's the net. That's the net balance. Like if you're viewing this as a T account, you know, that's the net debits. It would be on the left side of the T account, and then this is the net credits,
So,
all the
so
credit.
You're only populating that sheet into the trial balance.
Yeah. 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 For now, we're only doing this trial balance column of all the accounts that are on this pivot table. So accounts receivable, same thing. Go back to this calculation on the pivot table. Find accounts receivable. Take the sum of the debits, subtract out the credits, and it should equal 13,000. Those are assets. Let's do an example of like of a liability. So accounts payable. You're you remember accounts payable, the way you increase accounts payable is by credit, right? So you're starting with the credit. So take the sum of the credits, less out the debits, and then that equals the 1,550. Same thing with the, well, let's see, any of our equity, I think the equity should be pretty straightforward. But basically you go through, you populate all of those debits and credits, and then you know that you got everything because the debits and credits equal each other. So that's what you're doing. Populate the trial balance. So then after the trial balance is populated, you have these adjusting entries. Let's just go straight to the solution here. Okay, so in the template, I didn't do a pivot table for these adjusting entries. If you notice, right here, these adjustments, these columns are for these adjusting journal entries. So if you see number 1, that's for the lease expense for December. So the lease expense, you had to record, what was it, 3 months, I think. So you had to calculate the monthly lease amount, which was $1,667. See how you're crediting prepaid lease, which is an asset. Where would the debit be? It'd be lease expense. See, lease expense. So that's the first adjusting entry. The second is accrued interest on notes payable. We got that data right here. $250 loan taken. The interest rate was 5%. Payable 1 year plus all 12 months accrued interest. No monthly. Oh, so in this example, there's no month. Like earlier, we're talking about like the amortization, like there's a monthly payment. In this example, there's no monthly payment. They're just accruing interest each month, and at the end of the terms, they're just paying it all, interest and principal, in one lump sum at the end of the term. But you got to record the interest. It was 5%, and so interest payable account. So the monthly interest calculated 5% on that note was $1,042. So you're crediting interest payable, and then debit interest expense, which is right here. 3, the building to be depreciated straight line over 30 years. So number 3, you would record the depreciation expense, which you would calculate the monthly depreciation. In this example, it was, if you went back and did the math, it's $1,389. So debit depreciation expense, and then what is the credit? Would it be building or accumulated depreciation? Correct. Okay, so for office supplies on hand at the end of December, $500. So since in this example we're just crediting 500 off the office supply asset account, and then debiting office supply expense, or supplies expense, right here, supplies expense. During December, the company performed services of $5,000 of the unearned revenue received up front from the client. So this is just saying that you need to reverse out that unearned revenue. So you find the unearned revenue, and so to decrease a liability account, you would debit 5,000, then credit the service income. Number 6, salaries earned by employees since the 12/26 payroll run amounted to $1,200, so you need to accrue that salary expense. So you have salary payable for that $1,200, which would be a credit, and then salary expense for $1,200. Number 7, it's the income tax calculation. Number 7, you debit the income tax expense and then credit income tax payable, because you hadn't paid the income tax yet. That's after you file the tax return. This is what you're estimating in this juncture to pay for the income tax. Okay, so once you get the adjustments done there, then you're calculating the adjusted trial balance, which all you're doing here is you're just taking this trial balance plus or minus any adjustments to then calculate the new balance. So obviously there's no change in cash or AR. There's a change in prepaid asset. It decreased by $1,667, so you see the new balance is the $3,333. So you're going to calculate the adjusted trial balance columns. Then once you finally got that calculated, you're going to then use these adjusted trial balance amounts to then prepare the income statement. You could see that you could flow this over here to these columns for the income statement and balance sheet, and then you're then preparing an income statement based on these final adjusted trial balance amounts. So then you got so if you notice, I'm just linking these revenue and expense accounts to this tab here. Same thing for the balance sheet. So you see it's kind of formatted here, and then the retained earnings. And then I think the comprehensive problem has some write-out response. So yeah, if you, hopefully this will get you on the right track if you kind of are somewhat following this example here. Maybe practice this example and understand this example, and then apply what you learned on this particular example to that actual. So you could just use this as a template to complete the homework assignment. Yeah, this was a really long class, probably the longest class we'll have out of the 5 weeks, just because we had to cover 2 weeks worth of material. So yeah.
The syllabus says the balance sheet to prepare a balance sheet as of December 3rd. I assume it's missing a 1. It's December 31st.
I think. Hold up one sec. Why is it not recording? It says it's recording. It's recording what I'm talking about. I'll figure that. I might not have a recording. I actually have a. If it doesn't work, I have a recording from a class. So December 2nd.
The syllabus
Yeah.
It says
For the
here,
comprehensive problem?
no, yeah, it says, using the CESCO or whatever, equipment rental information found in William and L text, prepare your income statement, a statement of return earnings for the year ending December 31, and a balance sheet in report format as of December 3.
It's missing a one.
Yeah. Yeah. Oh, you're, yeah.
You're looking at the- I'm curious what.
I put the one there. I just,
Yeah.
and do you want us to do the infinite calculation?
Yeah, let me look at that template.
Let's see. Yeah. Earnings, but that's the same thing as this income
Okay.
before taxes, so that is incorporated in the template. Yeah. Yeah. Good question. All right. Y'all have a safe travels home. Let me know if y'all need have any other questions.
So are we gonna wait till next week to go over week 2 quiz? Or should we just attempt it? 'Cause it was on the list, I don't know.
Yeah, you got to do it. Yeah, the stuff we covered today,
Okay.
we covered all those chapters to prepare you to take week 1 and 2 quiz before you come to class. Yeah. Yeah.